Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Friday, December 3rd. Stock futures have turned lower as investors react to a much weaker than expected November employment report. The U.S. economy created just 39,000 jobs last month, and the unemployment rate jumped up to 9.8%. Economists had been expecting unemployment to hold steady at 9.6% and the creation of about 150,000 jobs. Following the report, treasuries and gold prices are turning higher on renewed pessimism about the U.S. economy. Later this morning, we'll get a reading on the service industry from the Institute for Supply Management, as well as a look at October factory orders.
Markets across Europe are also giving up earlier gains after that U.S. employment report, but the euro is rebounding against the U.S. dollar. Sentiment in the region is getting a boost from the European Central Bank's actions to address the sovereign debt crisis. Yesterday, the ECB confirmed that it will continue to offer as much liquidity as banks need, at a super low interest rate through the first half of next year. There are also indications that the central bank has stepped up its purchases of government bonds of some of the weaker Eurozone nations, including Ireland and Portugal. But Europe's problems are far from over. Last night, Standard & Poor's warned that it may downgrade Greece's debt sometime in the next 3 months. In Asia, stocks were mixed after the top brass of China's Communist Party ordered a switch from a relatively loose monetary policy to a more prudent stance. A top Chinese official said the country won't slam on the brakes overnight, but will gradually increase interest rates.
This week's M&A activity continues with a big deal in the mining industry. Walter Energy is buying Canada's Western Coal for $3.3 billion. The deal will create the world's largest producer of the type of coal used by steelmakers. Companies in the sector have been scrambling to take advantage of booming demand for steel and the coal used to make it from Asian countries. Walter Energy is losing ground in the pre-market following the announcement. Some analyst calls today may weigh on a couple other energy stocks. Dahlman Rose cut National Oilwell from buy to hold, and Stern AG reduced its price target on Transocean shares from $97 to $80. But on the other side of the coin, BMO Capital boosted its rating on Peabody Energy to outperform. Meanwhile, Deutsche Bank raised its outlook for oil prices next year, but cut its forecast for natural gas.
UBS is predicting more mergers and acquisitions in the consumer products industry after PepsiCo agreed to buy the Russian dairy and fruit juice company Wimbil-Dan yesterday. Elsewhere in the food sector, Citigroup upgraded DuPont to a buy following yesterday's strong earnings release. But Barclays is downgrading 2 supermarket chains. Kroger was cut to equal weight and Safeway to underweight. Some technology stocks may be on the move today after analyst calls. eBay is dropping about 1% in the pre-market after Citigroup downgraded the online auction site. And Wells Fargo cut its rating on Broadcom. But FBR Capital boosted National Semiconductor to outperform.
A couple analysts are initiating coverage on communication equipment maker Viasat. Wedbush put an outperform rating on the stock, and Wunderlich calls it a hold. Turning to the media industry, Time Warner and CBS were both rated new buys. And a couple healthcare companies may also be in focus today. Jefferies boosted its rating on Kindred from hold to buy, and Universal Health was initiated at neutral by Goldman Sachs. That's the latest from Weiss Research. Have a great trading day and a great weekend.